Taking a look at the new highs and new lows on the E-mini S&P interesting indicator. I want to show you this. First of all, you see the dollar sign WHN is the 52-week highs. Dollar sign 52 WLN is the 52-week lows. And this represents the number of stocks representing new lows. And this is the number of stocks representing new highs on the New York Stock Exchange. And what I want to show you here is 2018 starts right here. And down here at the bottom, I have a spread indicator, the difference between the new highs minus the new lows. And so what you see here is in 2017, from 2016 through 2017, you have this strong level of new highs coming into the market. All the way at the beginning of 2018, we had this sell-off, and then you see it reflected down here in the spread difference. Also, you see the spread differences up here, and then you have this sell-off, and then from this point going forward, you don't see anything nearly as high as last year. The average high on this is rather low, and so here we are coming into new highs on the S&P, but the new highs minus the new lows is still way down here. So there's a divergence here. Will the market tank, or will the new highs and new lows kick in and we get a parabolic move higher? And so that's an interesting divergence, something to take a look at. It looks like it can be a leading indicator. I have a strategy here that I've developed for this, just a basic strategy. It calls the long-term trend based on these new highs and new lows. Here it is. It doesn't use a stop loss or profit target, but here are the results. 53.6250 is the closed trade drawdown. With no stop loss, you can get a lot of fluctuation. Here is the equity curve, and so this is the open trade drawdown, so it's not reflected in the closed trade equity curve. And so you can trade this also with a stop loss and profit target. I'll show you that as well. Here it is with a $1,500 profit target, $1,000 stop loss, and so you get a lower max drawdown here. And so that reduces that sum if you add that stop loss, and you get many more trades, and you can see the results here. So that's one thing to look at, is the new highs and new lows in your development. I may have this strategy out soon. I'm still working on it. It is a swing trade system. Would be nice to have a day trade system that used the trend of the swing trade system, and so that's one concept to think about. And so another thing I want to show you is the range over close chart that we have. You see all of last year was in this range right here. 2017, the average range over close was very low. It made new lows going back to 1997, and it made those new lows back in October. Then we had this spike in range in January, February this year with the rally and then the sell-off. And then we've returned down here to this 0.5% daily range as a percentage of closing price, which is kind of in the range of 2017, and it continues to look like it's moving lower with low VIXs as well. And so the point of all this is that we have strategies that trade low volatility VIX swing. That's included with the money management algorithms. I'm going to show you that. So here's VIX swing at the end of last year, did really well. And then we had the drop off here where it took another long trade and it dropped. And so this doesn't have a stop loss on it, but the one we're trading now uses a 60-point or $3,000 stop loss, and the results do well in our portfolios. During this time frame, our other strategies such as Cobra 3, tick count trend, and other strategies like this did really well. And so it's a good combination to trade VIX swing, these long only strategies, so that we get these trades, because today we don't even have a signal in tick pulse. And so you have tick pulse not taking trades, Cobra 3 not taking trades. And so when volatility is low, VIX swing can capture it, and then when volatility picks up, we have a $3,000 stop loss on this, and tick pulse and Cobra 3 do a great job of catching the short trades. Some months, when we look back, some of those months we're up 20K on some of those strategies, and so the money we lost during this time period was much less than the combination of the gains made on the short side with strategies like Tick Pulse and Cobra 3. And so it makes a great combination, and that's what's currently in the portfolio. And the portfolio that we brought out yesterday with Cobra 3, this is what we're looking at. So let me know if you have any questions on this. You also get VIX Swing and a lot of long-only strategies, including Cobra CT2. You get the DAX strategies, which are long-only in the money management algorithms. And so you see we've taken some recent trades here. It has a tendency to buy these dips and sell the rallies. It would have been nice to continue on into this rally. It's hard to trade this. It's hard to trade a very low VIX gap up market like this. I want to show you tick count trend today, or tick pulse today. So here's tick pulse, and we got sell signals the last 2 days, small trades there, and then today there's a huge gap up and pretty much a narrow range melt up to new highs. And so there's no signals in tick pulse, and but VIX swing could be the next signal on any pullback, and so very hard to generate any signals on low volatility gap ups with a slow melt up. And so we're working on additional strategies for that. Sometimes you just have to hold it overnight, and we're working on strategies for that. VIX swing captures those moves as well. So one more thing I want to show you. What's interesting to me about the new highs and new lows is that we've been down 3 days in a row, and so the market went up, and the new highs, there's more new lows than new highs, and the market went up again, and the market made more new lows than new highs, and then the market has gone up again today, and we're only showing six more new highs than new lows. And the S&P's at new highs, but the NYSE stocks, there's only 6 at new highs, only 6 more at new highs versus new lows. And so that was higher earlier in the day. I believe 22 was the highest tick reading. So it's ticking down. This number is ticking down as the market is going up. And so the last 2 days, we've had more net selling. So you see all the red, more net selling. Tick Pulse took a short, and so you see that short trade covered, very small profit. And then the previous day, not any buying, a little bit of selling at the end, and so you get these negative ticks. The advanced decline was down. There's more new lows and new highs, yet the market is up, and so it's a strange divergence. Price ultimately wins, but you have to consider the divergence and the potential for a reversal in the market, or potential for a reversal in these indicators, and why there is such a big divergence. So there could be, oftentimes divergences can call potential moves one way or the other very big. So we could get a parabolic move like we did in January of this year, and this market could go to 3,000. The S&P could go to 3,000. The NASDAQ could maybe go to NASDAQ futures 8,000. And so we'll see if it rallies, if it rolls over on these divergences.